Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because it can be so tempting to try and predict every Bitcoin move in the short term, but it's so much easier to zoom out and think in probabilities. And as long as Bitcoin maintains its macro market structure, this short-term chop is just noise. Now, I know everybody hates the meme of, oh great, it could go up or it could go down or it could go sideways. That's very helpful, but I make what I think is the base case and the most likely outcome very clear on this channel. And it's very easy to be bullish here because Bitcoin is still holding above its 50-week moving average, which has not only been our last line of support this entire cycle so far, it was also the bull market support that we stayed above for the entirety of the 2021 bull market as well. And once Bitcoin actually broke down below that 50-week moving average and invalidated the bullish thesis, you still had plenty of time to get out if you wanted to before Bitcoin ended up going a lot lower, and we're still holding above that pivotal support region once again. And until it breaks, the default assumption should be that major support is going to hold. Now, I understand that sentiment is very gloomy out there right now, and it's very easy to feel scared and panicked, and nobody wants to touch Bitcoin now that market sentiment is fearful and everybody is an expert on how tariffs are going to go, the exact same way that everybody was piling into Bitcoin when sentiment was greedy, and everybody was an expert on strategic reserves and MicroStrategy's infinite money glitch. And this is just something we see over and over again in this market. When the market is super fearful and it's a good buying opportunity, everybody is bearish because of the narrative of the day. It could be the banking system collapsing like March 2023 when Silicon Valley Bank went under. It could be the implosion of the Japanese yen carry trade in August of 2024 when everybody became a Japan expert all of a sudden. And today, the new narrative is tariffs. Can they end up being bearish for markets? Of course, but nobody knows exactly how it's going to go or exactly how much of those tariffs are going to be implemented. And everybody is just using them as an excuse to be incredibly bearish and fearful here, just like they used strategic reserves as an excuse to buy Bitcoin above 100K before it rallies to 500K and every country starts piling into Bitcoin. And just like they used it as an excuse to pile into Bitcoin at 74K in March of 2024 because of the ETF inflows we were seeing and everybody giving these huge price predictions because the ETFs were going to buy hundreds and hundreds of billions of dollars of Bitcoin at any price. And this isn't even just a Bitcoin specific thing. We've seen this happen at least once per year with the S&P 500 as well. And of course, because they're both risk assets, when the S&P 500 does poorly, Bitcoin being further out on the risk curve tends to do worse, going all the way back to the correction we saw in 2023 when the S&P 500 dropped about 10% quite quickly. Bitcoin dropped around 20 to 25%, and everybody was concerned that they were both going to go a lot lower and that it was likely over for the cycle. Same thing that we saw last year in August when the Japanese yen carry trade implosion happened. S&P 500 dropped about 10% in 3 or 4 weeks. Bitcoin dropped quite a bit more, and everybody was convinced this was just the beginning of the end and it was only going to get worse. And here we are once again with a 10% correction on the S&P 500, and everybody's convinced it's going way lower because of tariffs and because of what Scott Bessent and Trump are planning to force the Federal Reserve to cut rates. But there isn't a certainty or guarantee that it's going to go exactly how the market currently anticipates, and the market could catch many investors off guard and off sides if this ends up reversing just like it did the past 2 times. So could the S&P 500 continue going lower here and this could turn out to be a 15% correction? Maybe. Could Bitcoin go lower and this could end up being a 30 to 35% correction for Bitcoin? Maybe. But unless you're a hedge fund manager who needs to tell his investors why he's underperforming cash or an index, or you're a leverage trader that's going to lose all your money and get liquidated if price goes down another 5%, why does it matter if this correction ends up being 20% or 15% or 10% if you say you have a long time horizon and you're investing for the long term? Because if you were to ask everybody when the best time to buy an asset is, they would tell you that it's when it's cheap and nobody wants to buy it. And we see this very clearly right now in the Bitcoin prediction markets. The market is now betting that Bitcoin won't go higher than 138,000 in 2025. Now we have no idea whether it will end up doing that or not, but everybody knows that the best time to buy something you have conviction in is when the market is fearful and when investors are selling it and panicking out of fear instead of buying it when everybody else is trying to. And you can see that so clearly here on the ETF inflows. Everybody was piling into these Bitcoin ETFs in November, in December, even a little bit in January. Then everybody was panicking out of the ETFs while Bitcoin was going down, especially when we saw the drop below 90K. And as of right now, the inflows and outflows are quite muted because everybody got bored and lost interest during this price consolidation. So for me, it's quite simple. I like to approach Bitcoin with a probabilistic approach. Do I think we can go below 70K? Of course we could. I just think it's unlikely based on where Bitcoin is currently traded. And we have to have a plan if that scenario were to happen. We already hit the area that I thought was quite possible because many investors wouldn't see it coming, and it would still be a retest of our previous swing high, and it would still maintain our macro structure. But I would not be convinced here that Bitcoin is going to go as low as everybody expects, and everybody is just going to be able to load the boat at 60K per Bitcoin and ride it to 300K over the next 4 years, all together holding hands. And this is why I always talk about the bigger picture in my free weekly report that I always link in the video description. Many investors lower their price targets as price goes down and raise them as soon as the market bounces. I have found that having a plan with a set invalidation and sticking to it to be a way more profitable approach than changing my strategy each day based on whether Bitcoin is bouncing or dropping. And something that happens very often during these consolidation periods is the market completely forgets how quickly Bitcoin can move. If we look at the price action here, a lot of people complain that this early cycle scenario says Bitcoin could go to 120,000 within the next 2 to 3 months. But if we look at Bitcoin's price action so far this cycle, these huge rallies are happening within a 2 to 3 week period because so many investors get comfortable shorting the market on the way down or while it's chopping, and then the majority of the price action happens in just 2 to 3 weeks. We went up about 50% in just 3 weeks after the election. After the ETF inflows really started ramping up, Bitcoin went up about 70% in 5 weeks. And again, I know these percentages have to get smaller as Bitcoin's price goes higher and as the market cap gets bigger. But during these extended consolidation periods, everybody forgets how fast Bitcoin can move, and they end up getting blindsided because they had a short position open or because they sold all of their holdings for cash so they could buy back in lower, and they end up having to chase the market higher by opening leveraged long positions or just piling in and FOMOing in at local tops once the majority of the move is already done. So for me, I'll continue focusing on the data until the data stops working. The last 3 times we saw an increase in global liquidity, like the one we just experienced, Bitcoin started rallying around 75 days later. Maybe this time it's going to be 85. Maybe this time is going to be 95. Maybe this time is going to be 105. Maybe this time is different and Bitcoin doesn't even rally and global liquidity doesn't matter anymore. But I'm going to use the system and the data until it stops working. I'm not going to try to guess whether this time is going to be different and whether it's going to stop working this time after we watched it work 3 times in a row already this cycle. And it's great that we have confluence with global liquidity alongside Bitcoin seasonality. We know that the end of March tends to be where Bitcoin finds its local bottoms. We know that in markets, April tends to be quite a good month because you get past all of that tax season selling. And we know that May can be a bit choppy, especially from about mid-May to late May. And then the summer tends to be a wash and tends to be quite choppy. And then Bitcoin and risk assets as a whole tend to do very well from October to early November. So I like the fact that seasonality is lining up with global liquidity here, especially because we had our March options expiry on Friday yesterday. $16.5 billion in options expired. And usually what price ends up doing is ending the options period at the max pain price for both people buying calls and betting on upside and people buying puts and betting on downside. And usually Bitcoin tends to do well once we get past that end of March options expiry and we enter into early April, and especially well in late April. And this is the past 10 years of Bitcoin seasonality averaged in the blue here. I also like the fact that the dollar looks like it wants to go lower. This is the biggest drop we've seen in the dollar since November of 2022. Similar to that time period, we saw a bounce and then an aggressive rollover. We saw the bounce, we have a big bearish wick to the upside here, and it looks like it wants to roll over. This should be good for risk assets and good for global liquidity. The market is still pricing in 3 rate cuts for 2025. I expect to see more get priced in, especially if we start to see more weakness in the labor market and more weakness in the stock market. PCE did end up coming in above expectations, and that spooked markets a little bit. But in the bigger picture, there isn't that big of a difference between 2.7% and 2.8%. It's not surprising that 2.8% spooked markets because it came in above those expectations. But when you actually look at the chart here, core PCE is really just going sideways. And I don't think we really have to panic until it gets back above that 3% round number. As long as it's somewhere in the twos, I think that's good enough for the Fed. And especially if we continue to see the labor market weaken, they're going to start having to face more and more pressure to ease sooner, especially if we continue to see more weakness in the S&P 500. When the stock market tends to perform poorly, that tends to affect hiring by those companies, and it tends to weaken the labor market, which will put even more pressure on the Fed to cut rates more than 3 times this year. So we'll see what happens. For now, my portfolio remains unchanged. My cash position is protecting my downside. My Bitcoin allocation is still quite decent. These altcoin holdings have been painful, especially Ethereum, but because I have my probabilities planned for how low Bitcoin could go, and I have my probabilities for what this cycle will likely look like for Bitcoin, I don't see the need to make any changes to my portfolio, and I will continue to follow my portfolio management system that has made managing my portfolio so easy and simple for me this cycle. And I'm still offering early bird pricing for the portfolio management system. It's almost done. There's only a few bonus modules to go. This week's module was about portfolio rebalancing, when I do it, how often I do it, and by how much I do it. You can learn more about that in the video description if you're interested. As for Bitcoin, perfect rejection off of our expensive region here. This isn't a magical level or anything like that. I just think investors started selling as we started approaching that 90K round number and a reclaim of our previous range. This isn't a magic level or anything. It's just a coincidence that Bitcoin ended up getting rejected perfectly between these two areas. It does look like investors are getting nervous buying close to 90K, and they're a lot more tempted to accumulate in this 70 to 90K region, but we'll see how price action develops next week and see if Bitcoin can come down and put in a higher low here, or if it's going to take out our previous low before rallying higher. We'll have to see how price action develops. And speaking of price action, boy, is Ethereum a painful chart to look at. We are now trading back into our old range that we consolidated in during the bear market lows. This would be the equivalent to Bitcoin trading at 30K today, while Bitcoin is trading 3 times above that. But all we can do here is just see how this ends up playing out. Bitcoin is the main driver of this market, so it's no surprise that Ethereum is performing terribly when Bitcoin isn't doing well. Ethereum Bitcoin is still trying to hold on to those major lows for dear life. We'll see how that ends up developing. As for Solana, doesn't look great either. Held that macro support level, big wick to the upside as sellers stepped in. We really don't want to see this level break, but it does look more and more likely that Solana is going to come down and retest those lows from 2 weeks ago. It doesn't look that much better on its Bitcoin pair, and we're seeing a continuation of the bloodbath we've seen for altcoins over the past few months or so. Now, the short term has been quite painful for these assets, but I'm still optimistic in the long term because the largest asset manager in the world's tokenized fund just tripled in 3 weeks. And a lot of these assets are on blockchains like Ethereum and Solana. I think tokenization is going to be a huge trend, and we can't talk about huge trends without talking about stablecoins. Look at the supply increase we've seen for stablecoins like Tether and USDC, and the aggregate increase across all stablecoins that we have in red. I think this trend is only going to continue. I think there is so much demand globally for the US dollar, and being able to own it and hold it yourself via stablecoins will be a huge trend over the next few years, in my opinion, especially if these issuers eventually give the stablecoin holders the yield that comes from holding things like US treasuries on their balance sheet. But for now, we'll see what happens. Bitcoin is still chopping up short-term investors in no man's land. Reclaim 90K and the party is on. Lose 70K and the party is likely over. Anything in between is just chop and noise, in my opinion. But as we look forward in the longer term, the federal government is still running huge deficits and devaluing the dollar. The trend of these deficits getting worse continues year after year. And as long as we're seeing exponential debt growth, I expect the money supply to increase exponentially as well as that debt gets monetized. And if the currency is being debased and the dollar is being devalued, that should be bullish for our risk assets in the long term, like the S&P 500, and our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Do you agree with these probabilities, or do you have different opinions? As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.